Okay, now that we have gone over the income information that is provided from Health and Human Services, we're going to be talking about the part of the income report that includes information that comes from the Social Security Administration. And there are a number of different things that are provided by Social Security. It's the Social Security benefit information, the supplemental security income benefits, dual entitlement benefits, Medicare data, and the disability status. The first part of this report is the regular Social Security benefits that a tenant would receive, and most of the time this is our elderly residents that receive this type of income. The report shows the gross and net benefit or amounts that the tenant receives. It tells who the income is paid to. It gives you a date of when the person was entitled to the benefit. And it also has a payment status code. And the payment status code you really want to pay attention to, because while this particular case here says that it's the current payment being made to the tenant, it may also say that they had applied for benefits and they were denied benefits, or that their benefits had been terminated. So you do want to watch that code. The other day, I know Yvette had one where the report, there was a page for the Social Security benefits, but no benefits were listed, and the person couldn't understand that because they said the person was receiving Social Security. And when she went into the system, the status code said denied. Now, possibly the person had applied for benefits, been denied, and then whatever reason they were denied for got settled, and the tenant had started receiving benefits, but a Social Security system had not picked up those benefits yet. So remember, the data is only as good as what we get from HHS and from Social Security. So in that particular instance, the tenant would have to, or the owner would have to get third-party verification from Social Security in order to verify the benefits that that tenant was receiving, unless they had a current award letter that the owner could use. One thing differs with the Social Security benefits from the wages that were reported by HHS is that the income report that shows the income from Social Security can be used both for the third-party verification that they're receiving the benefits, but it can also be used to calculate the tenant's income. Another section that you always want to pay attention to is this column over here, because as you can see at the top part where they are receiving regular Social Security benefits, it says that the benefits are paid. But if you go to the lower part of the screen down here, even though there's a dollar figure in this column, it's telling you that those benefits are not being paid. So you want to pay close attention to that column also. The bottom, it would also, up here, if the tenant had received a lump sum payment, maybe for a delay in the start of benefits or something, there would be a lump sum payment shown in that field. The bottom part of the screen is the benefits that are paid for dual entitlement. And dual entitlement is when the tenant receives their benefits on behalf of somebody else. For instance, a spouse may be receiving, a wife may be receiving benefits on her deceased husband. So that's what your dual benefits section is for. The report will show the last 8 actions that were processed by SSA. Also on this dual entitlement, there's a field over here that has a claim number, and that will list the Social Security number of the person who the tenant is drawing benefits on behalf of. The next section of the report gives you information on the Medicare data, and this would be the premiums for their hospital insurance and their supplemental medical insurance. The one thing that you need to watch, normally a tenant just has this withheld from their Social Security check, and I think the amount right now is $96.40. But there can be instances where a third party pays this premium on behalf of the tenant. And if this occurs, then you will have a Y in the buy-in column of the report and a buy-in start date. And it'll show you when that third party started paying those benefits. If the third party stops paying the benefits, then there'll be a date in the buy-in stop column. So this is important because if somebody else is paying the premium on behalf of the tenant, then the tenant cannot claim that premium amount as a medical expense. If the tenant is actually paying the premium themselves, then it is an eligible medical expense deduction. Like the hospital insurance is your Medicare Part A, and the supplemental medical insurance is your Medicare Part B. And we have had numerous requests about the prescription drug premiums. That's your Medicare Part D. And this information is not provided to us from the Social Security Administration. Whether it ever will be provided or not, I don't know. But at the current time, it is not provided. The next section of the report shows the supplemental security income. And basically it displays the federal and state amount of income that persons with disabilities would be receiving. Otherwise, it's basically identical to your other reports on for the regular benefits. Same type of information, 8 actions of pay. And you will notice in this column, this last column on this particular report, it says that the amount shown is a recurring payment. And the last part of the report shows disability status. And if there's a yes in the disability status, then that means that this person has met Social Security's definition for Social Security. Now, this is not to be used for determining whether a person meets the disability status in our programs. However, there are some of our programs that just the fact that the person is receiving disability Social Security benefits does meet the definition for disability. And again, on this, I can't stress enough that you always use the gross amount when you determine the income that the tenant is receiving. And with that, we're going to go over some examples of using the data, Social Security data, in EIV for determining tenant's income. Annual income includes the full amount of periodic payments received from Social Security. So that's your regulation that says that you use the gross amount. Annual income does not include deferred periodic payments from supplemental security income and Social Security benefits that are received in a lump sum amount or in prospective monthly amounts. So basically, if you, like I showed you before, that in that lump sum, Maybe there was a deferred start of the Social Security benefits and the person received a lump sum. That lump sum would not be included in income. And then we just have this little chart that's in the handbook that you can see that all other income that is not considered earned income is included in annual income except for live-in aides. And of course, live-in aides, we don't count any of their income because they're not a member of the family or the household. And again, and we say this over and over again, when calculating the Social Security income, always use the gross benefits paid, and then you will annualize those benefits. So this first example for Social Security is just simply that the tenant is receiving Social Security benefits. And you can see, I have a couple slides here that I just want to point out that you may see a gross amount and a net amount that are different. That means there's been some type of deduction from that person's Social Security check. And on the next slide, you would have that the net and the gross are the same, and this would be your indication that probably they may have the medical insurance and somebody else is paying their premium, so they're getting their entire check. But regardless of the fact, in both of these instances, the gross benefit paid is $1,148.40. So you would annualize that to arrive at $13,780.80, or rounded to 81, $13,781 when inputting it into tracks. And that would be the amount of income that you would report that the tenant was receiving from Social Security benefits. Now, in the next example, the tenant's receiving Social Security benefits and they are fluctuating. I would say on this that if you find this situation, that you probably should discuss it with the tenant to see if you can find out why their benefits are changing every 2 or 3 months. And maybe there was some reason that caused this, but maybe they will say now, well, yeah, they were fluctuating because of this situation, but now every month I'm getting, in this case, the $590. So you would, if they're stating that they're getting the $590 every month now, and that's their fixed benefit, that you may want to verify this with Social Security, and in that instance, you would annualize the $590 when you calculated their income. But if the income continues to fluctuate, then you could, take like your 12 months worth of benefits paid and annualize or arrive at an monthly average, and then when you got to that monthly average, then you would annualize it and count that as your annual income for that resident. In this instance, we show that when we annualized it, we got our monthly average, and then annualized it, it came up to $6,981 that the tenant's income was for this recertification period. In the next example, the tenant received a lump sum benefit payment for a deferred start of benefits, and they're now receiving recurring benefits monthly. So in this instance, you can see that they got a lump sum of $275, and now they're getting $55 a month on a regular recurring basis. So in that instance, the regulations say that the lump sum is excluded from annual income, so you wouldn't pay any attention to that $275, but you would annualize the monthly benefit and arrive, in this case, would be $660. The next example the tenant says they're receiving Social Security benefits, but EIV doesn't have any benefits at all in the system. In this instance, you can use the benefit or the award letter that the tenant can provide you, as long as it is dated within the last 120 days from your receipt. Or you can obtain third-party verification directly from Social Security by requesting that the tenant obtain a proof of income letter. And you may want, if you have to request that the tenant obtain a proof of income letter, you may want to assist the tenant in obtaining the letter. And this, you may want to do this to ensure that you actually receive the information that you need. The proof of income letter, when you complete that on the computer, there's right at the very top, it says you can check a box and collect all benefit information available. Or there's boxes below that you can select that you just want certain things. And you probably should be requesting or have the tenant request all benefits information so that's available, so that the tenant doesn't pick and choose. If they're getting more than one type of income from Social Security, they might, not even request it, and you might miss it. And then when suddenly it appears in EIV, you'll discover that they had unreported income. And we want to eliminate unreported income as much as we can. So to get a proof of income letter, it can be obtained from SSA's website at this address, or by calling their toll-free 800 number. And you can use other documentation that the tenant might be able to provide, but we don't recommend that, and you should only do that as a last resort. And if you have to do this, then you must put in the tenant file why you could not obtain third-party verification. And the next example is that they were receiving Social Security benefits every month, and now it's come to the end of the year and Social Security says, oh, we're going to give all of our Social Security recipients an increase in their benefits, and they call that a COLA increase, or a cost of living adjustment. Since these are not available in EIV until the end of the calendar year, we have allowed that the January, February, March, and April recertifications, that you can use the EIV benefit information that's in EIV that does not include the COLA. You could use a benefit or award letter that's provided by the tenant, as long as it's a current one, not over 120 days from the date of your receipt. Or you can apply the COLA increase percentage to the current verified amount that the tenant is receiving. And just to show you how you would calculate it, we just did a quick calculation that you can use for reference in case you ever do this. And we do hope that everybody did download these slides and have them available, because some of the screenshots you're not going to be able to see very well, and they'll be much clearer if you have them there in front of you. And also, this will be a good reference tool for you to have close by, so that in case you run across one of these situations, you can see how you should handle it. Again, to the COLA, you may have to have the tenant request the proof of income letter, and again, we recommend that you assist them in doing that. However, you don't have to worry about that for this year, because no people on Social Security are going to get any increases this year because there's no COLA increases will be given for 2010. So you will not have to worry about that for this year, but we included it in our training so that next year, if the Social Security recipients are lucky enough to get an increase, that you will know how to handle it. So with that, I'm going to turn it over to Yvette, who is going to talk about the Medicare premiums.
Thank you, Diane. That was a real good explanation on how that information can be used in EIV for the Social Security recipients. A lot of explanation there that we've received a lot of questions over the past couple of years on what does this mean, what does that mean, what do I do ifs, and she covered that very well. So next we're going to move to a case study, actually two examples on treating the treatment of Medicare premiums that tenants are paying or not paying. In example one, we'll speak of a tenant that is receiving Social Security benefits and is paying the Medicare premium. When the Medicare premium is paid by the tenant, you annualize that monthly amount to get your annual medical expense amount. So in the instance where you have a $96.40 monthly payment for the Medicare premium, you would multiply that by 12 to get your annual medical expense to be put onto the 50059 to go through tracks. Here again is just a screen of the income report reflected in EIV for Social Security. It's kind of cut and pasted different areas, but it does show you benefit history, your gross amount of income, and then over where it speaks of the net benefits, which is the amount of the monthly payment to the tenant or recipient. You could tell that there's a difference there, and it's noted at the bottom the difference is the $96.40, which happens to be in this case the amount of the monthly Medicare premium. So this will show or reflect that the tenant is actually paying this amount so that you can take the $96.40, annualize that, and use that as the medical expense because they are not receiving it. It's being netted out of their monthly check. Here's another portion of the income report when you scan further down when it gets into the medical premium section. It does reflect there the $96.40. It also indicates with the N a no, as Diane spoke earlier, meaning that there's not a third-party entity paying for this premium, that the tenant is actually paying for this amount. And here again, just to recap, what you would be including as a medical expense for a tenant paying the medical premiums is you would annualize that monthly amount shown in the income report of $96.40 in this case, multiply it by 12, and that's how you're going to get your annualized medical expense for the premiums for Social Security. That goes on the 5.9, of course, and gets transmitted through tracks. Now, there are times you may notice when there's going to be a difference between the gross and the net benefit amount, which is more than the $96.40. So let's just take a little look at what's going to happen and how we're going to treat this. This is a particular situation where you can see the gross amount of the $1148.40 and then the net benefit amount of $1,017. That's leaving a difference of $131.40. That difference is greater than the $96.40, which is, let's just say in this case, is the Medicare premium that's permitted for that particular year. What you're going to need to do is reconcile that difference amount. Of the $131.40, we know that the $96.40 basically goes to the Medicare premium, but the difference needs to be identified. Something else is being withheld from the tenant, and we can't automatically classify that as an amount to be included in the medical expense, or the monthly amount times 12 to equal your medical expense, because we don't know what that amount is. So that will take some research on your part and some assistance from the tenant to determine what that difference is made up of. That difference could quite possibly be some portion having to be attributed to the Medicare Part D, the prescription drug program. We don't know. They don't separate it out. We have no idea. It could relate to a past garnishment amount, or could relate to a host of other items that they are netting from the tenant's check. And many of these items you would not include in with the $96.40 to arrive at your annual medical expense amount for your 5/9. Some items you would, but that's why it will take some research on the owner agent's part and assistance from the tenant to determine exactly what that difference is. Here again, I just basically mentioned to discuss with the tenant and determine the reason for that difference, and then that you're going to know how to treat the difference, whether to include it in as an expense or exclude it as part of the medical expense. In doing the research, you may have to go and get the third-party verification from Social Security. They may have current documentation from Social Security demonstrating what those amounts are. So just speak with the tenant and you will need to determine what that amount is, or you're not going to be able to include it as an expense. In our next example, we've got a tenant receiving supplemental Social Security benefits, and they do not pay for the Medicare premium. When the Medicare premiums are paid by the state or another entity, you do not include them on the tenant's 5/9 as part of a medical expense when the Medicare premium. You use the gross amount of income shown, and you do not in any way include the Medicare premium because it's being paid by a third party. This slide just merely demonstrates your gross amount equals your net amount. The net amount is the one that the tenant is receiving. So obviously it's not coming out of their pocket, so it's not going to be included as a medical expense. Here again is the lower portion of the income statement. This actually reflects the buy-in. There's a Y there next to the $96.40. That indicates that it's being paid for by a third-party entity or the state. So that also would be an indication not to include that as a medical expense for that tenant. Now, I know that some of you in the past have noticed, and I know years ago when I worked in the field, when reviewing the information in EIV, that Y would be there for buy-in amount, but we had other documentation from the tenant reflecting that the tenant was actually paying that $96.40. So we just want to alert you to the possibility of, let's just call this a false positive, where this could be telling you that, hey, a third party is paying this amount, when in fact you know that the tenant is, and they can demonstrate that, either by a third party verification or some current documentation from Social Security. So that's just one thing we know many of you have seen with your tenants, and just to let you know that we are aware of this. So that's how you treat it if you come across it when doing your recertifications. At this time, as mentioned, we have a series of skits. The next skit we have is on annual income. So let's go to the skit.
Good morning, Joe.
Good morning, good morning.
Great, thanks for coming in. Did you remember to bring the information that was requested in
Hey, I
the
sure-
income recertification notice that I sent you?
I sure did.
Okay.
Let's see. I've got my receipts for the convenience store, the 4 recent pay stubs.
Pay stubs, great,
I've got the letter from the Social Security Administration.
all right.
I've got, now I don't have very much information on my bank account.
Oh.
I'm sorry.
Okay.
And I'm pretty healthy, so I don't have any medical expenses.
Oh, you're fortunate.
Yeah, thank you. And the last thing I do have is the completed checklist. So there's all of the information that you asked for.
Very good, thank you. Well, why don't we take a quick review of the checklist?
Okay?
We want to see what your income was, if maybe there's some deductions that you qualify for. Basically, we want to make sure that you haven't overlooked something that should be on here.
Right, right.
Okay?
Well, like I said, the only places that I have income is from my Social Security and from the part-time job at the convenience store.
Okay, did you read the EIV and U brochure that I sent with the recertification notice?
Yes, I read that.
Okay, well then you know that I can access your employment information, your wage information, and your Social Security benefits information simply by accessing HUD's EIV system through my computer.
Wow, that's pretty slick.
In fact, I did that before you came. I printed out the report so that I could have it here
Oh,
for us
okay.
to go over. You can see here, the first part of the EIV income report shows that you were working at the corner convenience store, and that for the first quarter of 2009, you earned $1,450. And you show on the checklist that you gave me that you are indeed working at the convenience store, and that you made about $6,000 last year. Is that right?
Yeah, that's about right.
That's about right. Well, okay, so let me look at your pay stubs. What do we do with them? Let's add it up here. And sure enough, I can see that for the 4 weeks, you brought in $500.
Well, but I only got about $400.
Yes, that's about what you receive after payroll deductions for such things as taxes and insurance. But now to calculate your annual income from your job at the convenience store, we're going to start with your gross income before any deductions. Okay?
Okay.
So use the calculator right quick.
Uh-huh.
You earn $500 a month,
Yeah,
divided by 4 is $125 per week,
okay.
times 52 weeks, which gives us a gross income, projected income at any rate, for this upcoming recertification period from your job of $6,500.
Oh, okay,
Is that right?
okay.
Okay, now also see here on the EIV report that you have Social Security benefits of $950 per month. It also shows that your Medicare premium of $96.50 is deducted from this amount.
Right,
Sound about right?
that sounds about right.
Okay.
And that's the reason, I guess that's the reason why my check is about $850 as opposed to the $900.
Yeah, your check's about $863, and yeah, $863, something like that.
Yep.
Well, that's because it's for the net benefit amount. That's the amount you receive after after Social Security deducts the $96.50 for your Medicare premium.
Okay,
All righty, now to calculate what your income is going to be from Social Security, we take the gross amount, $950 times 12 months. You're going to get Social Security benefits of $11,400. And they're going to use the
Okay.
$96.50 as a medical expense. That's your Medicare premium. Now, are you sure you don't have any other medical expenses?
no, even though I'm an old man, I'm still pretty healthy.
Okay, well, you've got to let me know if you do, because I'll have to send off verification reports to your doctors and to the pharmacy.
Yes, if that comes up, I will certainly do that.
Okay?
Now, I do have one question, though. You've got this EIV thing that you pull all this information out of.
That's great.
Why can't you use that to do all of this work? Why do I have to bring in my pay stubs?
Well, that's because the information in the EIV system is really pretty old. we can get a much more accurate projection of your anticipated income over the next 12 months if we use your current income.
Oh, okay. Well, I can see why you like this EIV thing, because with all the tenants here in the building, this must save you an awful lot of time.
Oh, it really does. Saves a lot of time, but also saves a lot on postage with what postage costs these days.
Okay.
Okay, Joe, but before you leave, there's one more thing we need to do. I
Okay.
need to verify your banking information. You didn't bring your checks in, couldn't find your stuff. So what I need for you to do is to sign this bank verification authorization form,
Oh, okay.
and I'll send it off to the bank. Okay?
Okay.
All righty. And I'm going to ask you to wait one more minute. I'm going to make copies of your pay stubs and your Social Security letter. I'm sure that you'll want to keep the originals for your files, and I can have a copy for my files. Okay? So just sit there a minute. I'll be right back. So I'll be back in a moment.
I hope that that skit that you just saw illustrated the information that we have been talking about on income reports and using the EIV data. And I hope that you enjoyed watching it, and as much as our fellow workers enjoyed preparing the skit for you. I just wanted to go back. This where you may have to obtain additional third-party verification. Many times that you're probably going to find that difference is the prescription drug premium that the tenant is paying. And if you have to obtain information or third-party verification for that, you will have to go to the source where the tenant is getting their benefits from. I don't believe Social Security could probably verify that for you. I just wanted to clarify that. Okay, now that we have gone through the income report and how to use the data that is in EIV, and we've had our little skit, you're probably wondering, when am I supposed to use this income report? So the income report must be used at recertification. That's annual, initial, or interim recertification. And by initial here, I don't mean move-in, because remember, we don't have any data on applicants. So we would not have any information at the time that they initially move in. But this would be an initial certification, like you have a tenant that's going from one type of subsidy to the other. For instance, a 236 tenant is now going to the Section 8 program, and you're processing an initial certification. Since they should already be in the system for the 236 program, then you would be able to use EIV for their initial certification to the Section 8 program. And for the interim recertifications, you would probably only use this if the tenant reported that somebody has received new employment, or that their employment income has increased by more than $200 a month. And you may not have the current information that you might need at that time that it's reported to you, but you can also always go in and see if any of the information is in the system. So it could be used at the time of interim recertification. As we've said before, this income report serves as third-party verification for the HHS data. That would be your wages, employment, and unemployment compensation benefits, that it can be used to support any employment. But when you go to calculate the tenant's income, you would have to use either tenant-provided documents or third-party verification if necessary. For the Social Security information, you can use it for both third-party verification that they're receiving the benefits, and also for calculating their income from those benefits. The report must be printed and retained in the tenant's file. If the tenant disputes the information that's reported in EIV, then you should note this on the income report that you place in the file, and then go ahead and obtain your third-party verification from the third-party source. So that concludes the presentation on the income report. So now we're going to talk about no income report. So to get to the no income report, you go back to the summary page that shows lists all the reports, and you would select then the no income report. And the no income report will give you a list of all tenants that passed the verification, went through, was matched against HHS and SSA data, but there was no income reported by either of the income sources. However, just because there's no income reported from HHS or SSA does not mean that that tenant does not have any income, because there's all other type of income sources the tenant could be receiving. They could be receiving welfare benefits, they could have income from pensions, they could have income from assets. This is not an indication that this tenant does not have any income at all. You should use the no income report at recertification and at other times as stated in your policies and procedures. And we also do recommend that in case that it ends up that you're showing this tenant as a zero income tenant, that you verify the status of these tenants at least quarterly, and at that time, according to your policies and procedures, you can use the EIV to determine if any income has been reported since the last time that the tenant was certified. The new hires report, again, you go back to your screen that lists all the reports, and then you would click on the new hires report over here. In this particular contract that we queried, it said there were 337 households that new income was, or new employment was shown in EIV. That must be a big project, because that's an awful lot of tenants to report with new employment. But once you get to the new hires report, again, you can click on the detail tab to show all the tenants that had new employment shown, or you can select a tenant and view the details for that tenant only. This report provides information on households who have started new jobs within the last 6 months, and the information is updated monthly. And this is the report that Gail talked about, that you're going to have an option to query for different lengths of time that you want information on tenants that has new jobs. Now, there's nothing new on this report that isn't reported on that second section of the income report. The only thing is, to help owners and agents, we have provided this tool that they can go in and pull a report that just shows tenants that got new employment, and they don't have to pull up every tenant to see if they have new employment. So it's pulling the same information that you would see if you pulled up an individual tenant and under the employment section of the income report. We recommend that the owners and agents have policies and procedures to use this report no less than quarterly. Once EIV becomes mandatory, this recommendation will become a must, that you will be required to have policies to use this report. You remember that the lease requires tenants to report when an adult member of the household who was reported as unemployed on the most recent certification or recertification obtains employment, or when the household's income cumulatively increases by $200 or more a month. So you may want to be proactive, have policies whereby you run this report to check to see if anybody has new employment that hasn't come in and reported it to you. This will, if you're proactive about it, notify the tenant that you've learned that they have new employment, ask them to come in and discuss it with you. If they agree, then you can obtain check stubs or other supporting documentation from the tenant to support the income they're receiving. Or if necessary, you can obtain third-party verification. But, and then you would, of course, prepare a certification that included this new income. By being proactive and using this report and contacting your tenants, it's going to eliminate and reduce retroactive payments that right now, with the use of EIV, there's been so much unreported income that has been found out by the owner or agent, and it has caused them maybe to evict tenants because they don't cooperate in coming in and repaying any amount that they may be due, or causing them to enter into repayment agreements and more accounting on keeping track of tenants that have to pay extra money besides their rent. So it would just eliminate a lot of work if you could kind of be proactive and eliminate this type of problem. And Mike is going to be getting into repayment agreements in his session later on. And is it Mike next? Oh, sorry. Yvette's going to come up now and talk to you about the income discrepancy report that's within EIV.
Okay, I believe this is the last report that we're going to discuss today, the last one in EIV. It's the income discrepancy report. Some of the things that we'll be discussing, some of the topics are defining exactly what is an income discrepancy. We'll review navigating around the EIV system, locating the income discrepancy report. We'll discuss the owner-agent's responsibilities in reviewing and resolving the income discrepancies. Income discrepancies occur when the income in EIV differs more than $2,400 from the income reported on the tenant's 50059. That creates the income discrepancy. It's important to note that only income from wages, that's HHS, and Social Security are contained in EIV. So where you have other wages, such as pensions, annuities, things of that nature, IRAs, any income from the banks and so forth, those items are not reported in EIV, so they'll not be part of an income discrepancy. They actually could be listed on the tenant's 50059 as income, but you will never see those, well, at least at this point, in EIV. They're not located there. Just the HHS data, which is the wages, and the SSA data. Just a little information on navigating to the income discrepancy report. Actually, you can go to the income discrepancy report through any of the income reports listed under income reports, income information. You can get to it from the contract number, the project number, or the head of household. Those reports are all going to provide you with an income report, a detail report, and an individual record. So For the purposes of our discussion today, we're going to go ahead and navigate through this system by using the contract number. By entering the contract number, and in this case we listed for all months, this screen comes up showing, as we went through it before, you got your income report, income discrepancy report, no income, new hires, those items Diane just spoke about, but we're discussing the income discrepancy report. And in this case, we can see that out of 166 households this property has receiving assistance, 61 of those households have an income discrepancy. That's fairly high. So this goes to say that this is an actual property. So it goes to say that these things do need to be taken care of and reconciled when they're found out. After you reach this screen, go ahead and you click on the income discrepancy report, because if you have items or records listed there, that is going to be highlighted. You're not going to go to this screen. When you click on the income discrepancy report, we do miss a slide here. When you click on the income discrepancy report, you're going to get a listing of, in this case, the 61 head of households. And it's going to provide some information over on the right-hand side about the households, percentages of income, that's the discrepant amount, and so forth. But each of the head of households will also be highlighted so that you can select an individual head of household and go into that record to see exactly what type of discrepancy is occurring. All right, so this is the slide where we went into an individual head of household, and this is what we're going to be looking at. This is the slide. The top portion of this particular slide, this document, this data here comes from our track system. And that's going to be compared against the income that's been uploaded from SSA and HHS in EIV. So you're comparing those two data sets. Where there's a difference again of $2,400 or more, it's going to create a discrepancy, and it's going to put these amounts out here. Now in this particular example, it's showing that there's a 50059 in the system reflecting zero income. That's been transmitted in through tracks. Yet there's income in EIV, and they've annualized it based on the calculations we went over to some great extent last year, which if you are interested in seeing how they arrive at these amounts here, which are the annualized amount, it says reported annual wages and benefits from EIV, and then it goes down to list the amount of annual income discrepancy. These amounts here, we did go into detail quite a bit last year during the December webcast, and we've got several case studies on the calculation of those amounts. If you are interested in seeing how those are calculated, please refer back to those webcasts to get that amount. But here again, like I say, this is giving an annualized EIV amount from those amounts of income that are reported into EIV, and it's showing that there's that much of a discrepancy in income. At the time of recertification, OAs are required to review and resolve any discrepancies in income reported on the income discrepancy reports. So when you do your recertifications, make sure that this is one of the reports that you will be reviewing prior to completing that recertification. Remember, the income discrepancy report is only a tool to be used to determine whether or not all of the annual income is being reported by the tenant. Not all discrepancies that you find in the system are going to be actual valid discrepancies. There are times when income is reported accidentally under someone's Social Security number. We've had cases where we've determined that a tenant's Social Security number was transposed by an individual living in, say, Florida, who happened to be a roofer. The tenant lived in Washington State. They did some research because there was a discrepancy, and the tenant did dispute this, A management agent assisted the tenant in looking into the matter, and they determined that the actual employer in Florida, the roofing company, had transposed one of their current employees' social security numbers, and it turned out to be this tenant's social security number. So what happens then, all those wages are going into Social Security and HHS under her social security number. So we did advise her they should look into that, and they did. The roofing company did make the necessary changes to correct that. But that's just one example of how it can appear on an income discrepancy report, but not be a valid income discrepancy. When income data in the EIV is not the same as reported by the tenant, or the tenant disputes the income, this is in addition to there being an income discrepancy or not. There may not be an income discrepancy, but the tenant may come in and just say point blank, that's not my income. Anyway, this is just under a disputed situation. The OA must complete a third-party verification with the reporting employer. Once that's completed, they need to notify the tenant to come in and discuss the results of the third-party verification, and then arrange for any repayment of over- or underpayment if applicable. If it's determined that the income is not that of the tenants, make sure, OAs, to document your files that you've completed this third-party verification and made a determination that that income does not belong to that tenant. Remember, OAs cannot suspend, terminate, reduce, or deny any rental assistance based solely on the data in EIV. EIV is only a tool used for you to go and verify that information to substantiate the income for your residents. Next, we have a skit that will demonstrate how an income discrepancy is resolved. We've got a couple of people we filmed in our office, and I hope you enjoy it.
Good afternoon. How are you doing, Mrs. Fields?
I'm doing well, thank you.
And how's little Sarah?
She's doing good.
Good. I see we sent you a couple of notices, and it's getting late in your recertification process.
Well, I've been sick and I couldn't come in.
Well, we certainly hope you feel better. Let's get started. Do you have any forms that we sent you a few weeks ago, the required documentation that was listed in your checklist?
Yes, here are the forms. I haven't found a job and I have no income.
Did you receive the EIV U brochures that we sent you in your recertification package?
Yes,
Well, did you read it?
yes.
Ms. Phil, as noted in the EIV-U brochure, we have access to data relating to the incomes that the tenants receive for Social Security, wages, unemployment compensation, and new hire data. You have indicated on your recertification that you were not employed.
That's right.
Well, the EIV system indicates that you have wages from an Alpha Hotel Services for the past 3 years. Have you ever...
That's not mine. I've never heard of them. I've never heard of them.
So you do dispute this income?
Yes, I've never heard of them.
Well, Alpha Hotel Services looks like a parent company that may be a local company here. You may have worked for the past few months or few years or the past 3 years. Do you recall working at all?
I told you no, that's not my income.
Well, we need a third-party written verification with Alpha Hotel Services because they're reporting here that you worked for them for the past 3 years and you're receiving about $19,000 a year. See, here it is reflected in EIV.
That's not me.
Well, Ms. Fields, it looks here that it seems to be some conflicting information here.
So what do we do now?
As I said, we will need a written third-party verification with this employer. It very well may be that this may not be your income. It may be that they transpose the Social Security number, or it could be a case of identity theft. Once we receive something back from the verification, we will give you a call to come in and discuss the information that was provided.
Okay, thanks, Ms. Grant.
Okay, I'll be in touch. Oh, hello, Ms. Fields. Thank you for coming in again. We heard back from our third-party verification from Alpha Hotel Services, and it has been returned. They do indicate that you are currently employed with them, and here's a copy of the verification.
Well, I need to find out about this.
Ms. Field, at this time, we do need you to complete your recertification because the income was reported in the EIV and we completed the third-party verification. We will be basing your current income off of your verification return by Alpha Hotel Service.
That's not right. Who can I call about this?
We're also in need to go back 3 years to recalculate the subsidy payments being calculated using the income from Alpha Hotel Services. Any amount that was overpaid in assistance, you will need to repay.
Well, that's not right. You can't do that.
We will need you to complete the recertification today. Remember, you came in late and everything has been pushed forward. What you can do is contact Alpha Hotel Services and discuss their reporting of income under your Social Security number. If it does turn out that they have reported income in error, we will do a corrective annual removing this income from your 5/9. But until then, we need to complete your current recertification and discuss repayment options for the past 3 years.
Well, Ms. Grant, what if I refuse to sign my 5/9?
Well, unfortunately, we'll have to move your rent to market rent and pursue repayment of overpaid subsidy for the past 3 years.
Well, just to let you know, I'm going to sign this, but I don't think it's right. It's wrong. This isn't right.
Okay, we hope you enjoyed that short little skit on income discrepancy. And I am back to now address a subject that we've received a lot of questions on, and that has to do with unreported or underreported income and how repayment agreements are developed and out of the EIV system that may have uncovered some unreported or underreported income from tenants. First, we must understand that you as an owner agent can only go back a period that is not to exceed 5 years from the date of the most recently signed Form HUD 9887. Okay, that's what the 9887 says, that you can go back 5 years to determine annual income. And this is the governing document for going back to recapture any funds. So that's the first step. And also, in order to recoup any funds, there must be a signed 50059 on file, and this 50059 is actually representing the tenant's certification as to the accuracy of the income at that time. This must be on file along with the supporting documentation of the income at that time. How much can we collect back? That's often a question we receive often. The amount that can be collected must equal the difference between the amount of rent that the tenant should have paid and the amount of rent that was actually charged. Again, the owner and agent needs to have this historical documentation, the 50059, and other documents in order to proceed with the process. The tenants are obligated by their lease to reimburse the OA if they are charged less rent than required by HUD's rental formula. The tenant is not obligated, however, to reimburse the OA for any undercharges in rent due to an owner-agent error. The penalty for a tenant not agreeing to repay the money owed back is termination of tenancy. This is due to the non-compliance clause in their lease agreement, and you can refer to the lease for this paragraph. Okay, repayment options. There's 3 ways in which a tenant can repay. One is through a lump sum payment all at once, nice and clean. They just pay back the money all at once. They could also enter into a repayment agreement, or they could do a combination of the lump sum and a repayment agreement, whereas they pay off one sum at one point and then agree to pay the rest over a period of time. Now here's a few parameters, some of this is new, of what a repayment agreement should include and what it needs to be based off of. The repayment agreement must be based on what a tenant can afford to pay. The monthly payments must not exceed 40% of the tenant's income when added to rent. I'll explain this in an example on the next slide. A repayment agreement can also be developed on a certain time frame so long as the 2 bullets at the top are adhered to, 40% and based on the tenant's ability to afford the repayment agreement. And this information can also be found in the new EIV notice 809-20. Okay, in the repayment agreement, the 40% rule, this is actually, I said must not on the last slide. This actually should not exceed 40%, because if the tenant does agree to pay more than 40%, if they feel that they can afford more than 40%, by all means they can agree to pay more than 40%, but that is the tenant's option. The 40% there is to be able to kind of regulate how much is actually being charged to the tenant. Okay, so getting into this new 40% rule, here's an example of a family's monthly adjusted income equaling $1,230. Their current monthly rent, or 30% of their income, is $369 a month. 40% of the monthly adjusted income of $1,230 would equal $492. So the monthly payment should not exceed $123 per month. This number is figured out by subtracting the $369, the family's monthly rent, from the $492, and that equals your $123 for the 40% rule. You could also base your repayment agreement on a time period. Let's say the tenant has $1,000 to repay, and they wish to pay it off in monthly amounts of $25. Well, $25 divided into the total amount of $1,000 to be repaid is a time period of 40 months. At the end of 40 months, the $1,000 will be repaid. Another time period example would be, excuse me, if the tenant agrees to repay $1,000 in a time period of 24 months. The monthly amount will equal $42 for 23 months and $34 for 1 month. And the next slide will see how we arrived at those amounts. The first calculation that will need to be done is to take the $1,000 total and divide that by the 24 months that the tenant wishes to repay in. That equals $41.67, or rounded up to $42 per month. So you take the total amount of $1,000 and divide that by the $42 per month, and that gets a figure of 23.8 months. It's not clean, so the $42 per month multiplied by the 23 months will then give you a figure of $966, and when subtracted from the original $1,000, the final month's payment will only be $34 to cover the final expense to get to your $1,000 repayment. Now, the written repayment agreement should include the following. It must reference the lease where the tenant could be in noncompliance if the agreement is not adhered to, and it should also include a clause to revisit the terms if income should fluctuate up or down. It should also be signed and dated by the tenant and the owner agent. And the next bullet, the owner agent must not apply the monthly rent payments to the amount due on the repayment agreement. What this is saying is if the tenant is making monthly rental payments, the monthly rental payments must go towards monthly rent. Repayment agreement payments must be applied to the repayment agreement. Now, all funds collected from the tenant through these repayment agreements must be reimbursed to HUD in accordance with Chapter 8, Paragraph 820 of the 4350.3 Handbook, the Revision 1. After verifying the tenant's income, the owner and agent must complete corrections to the prior certifications, whether it be an annual correction or the interim, affected by the income change. Now, these voucher adjustments are done through the use of an OARQ, which stands for an Owner-Agent Initiated Accounting Adjustment. This OARQ is not needed if the repayment is made in one lump sum. You won't need the OARQ. The OARQ is only needed when the tenant is making monthly payments. What you're doing by performing an OARQ is you're actually reversing the adjustment that was created by the correction of the prior certification, and you're subtracting the lump sum payment by creating the OARQ. As the tenant makes the payments, the owner agent can enter them as negative amounts on the voucher as OARQs when the owner agent receives the funds from the tenant. An example of this is the tenant is paying a repayment agreement of $50 and the owner agent's costs are $8. We'll discuss the costs in a little bit, but those are allowed to be subtracted out from the payment for the OARQ adjustment. So in this case, the OARQ adjustment is negative $42, which is the $50 minus the $8 it costs to recoup the funds, and that equals $42, and as I said, you make that a negative. Now, to go along with the OARQ adjustment, the comment field should explain the transaction. Here's an example for Unit 1023, John Smith. The OARQ was $50 minus the collected cost of $8. Now, the OAs may retain a portion of the repayments they actually collect from the tenant. They may retain up to 20% of the amount they actually collect from the tenant. It's no longer limited to fraud, but it is still tied to the amount that is actually collected from the tenant. And this amount retained cannot exceed the lesser of 20% of the collected funds and or the costs associated with pursuing the retrieval of funds. It's a lesser of. And the second bullet point down here, the costs associated with pursuing the retrieval of the funds, that's where the $8 came from earlier that we subtracted out. The amounts retained by the owner agents must also be deposited into the project's operating account to offset the expenses incurred for these cases. Now, for record keeping, to keep track of the repayment agreements and all costs that were kept, or the up to 20% of the funds actually received, owner and agents are responsible for keeping their receipts of all of the amounts collected from the tenant, documenting all of their expenses incurred, and the amounts retained by the owner agent. The voucher adjustments indicating the repayment from HUD should also be tracked. These need to be kept in order to track any of the monies held by the owner agent from these underpayments of rent and repayment agreements. Now, examples of expenses incurred by the owner agent that can be kept include staff time, the collection agency fees, or any fees from state requirements that you are required to meet. So that takes care of the underreporting of income and repayment agreements. And at this time, we're going to show a short little skit on underreported income.
Ms. Jones, thank you for coming in such a timely manner for your annual recertification.
You're welcome, Mr. Stewart. I like to get my recertification done early so that I have an understanding of what my new rent will be.
Great. Well, as you know from reading the EIV brochure, this year I will be using the EIV system to verify your employment. This system will help me verify any income that you may have received.
Yes, I am aware of the EIV system. And also, here's a copy of my pay stubs from my job at General Securities.
Thank you. What I am going to do now is I am going to use the EIV system to verify your employment at General Securities and the amount of income you receive, and I'll be able to see if there's any other income displayed. First, I'm going to enter your Social Security number within the system and then display your income information and then get a printout which we can discuss. I see here that your General Securities income matches the pay stubs you brought in, but the system is showing that in addition to General Securities, you also have been receiving checks from a company known as FC Staffing, Inc. Do you know anything about payments from this company?
Oh, well, I sometimes do the evening shift as a fill-in receptionist, and I think I've seen that company name on the checks I've received. And I only work there on occasion, maybe 7 or 8 times a month for a few hours, and just to give me a little extra money. And really, Mr. Stewart, it's not a full-time job or anything like that.
Even if it's not a full-time job, Ms. Jones, this income would still have to be reported so we can accurately calculate the amount of assistance you are entitled to. How long have you been working as a receptionist?
Well, it's been a while now, probably 6 or 7 years.
Okay. You know from reading the EIV and U brochure that it is your responsibility to report all your income. The 9887 form giving your consent for us to verify your income enables us to collect any underpayment in rent due to income that was not recorded for a period of 5 years. Since you do not dispute that you work for FC Staffing, the first thing I need to do is to verify how long you have worked for them and how much you have earned. This will be done through a letter sent directly to FC Staffing. Once we receive the accurate data of employment from FC Staffing, I will contact you again and go over the details of any possible steps we need to take.
Will I need to pay any money back?
Ms. Jones, I am not sure of that until we receive verification back from FC Staffing, but I will go over those details upon receipt of the verification from them.
Okay, thank you, Mr. Stewart.
Thank you, Ms. Jones. Good morning, Ms. Jones. Come right on in and have a seat.
Thank you, Mr. Stewart.
You're welcome. Ms. Jones, we received the verification back from FC Staffing. Here's a copy for you. It says here that you began work for FC Staffing back on August 4th, 2003.
Yes, that sounds accurate.
According to FC Staffing, you made the following amounts of money, and I'll go over them with you. Fiscal year 2004, you made $5,760. Fiscal year 2005, you made $5,980. Fiscal year 2006, you made $5,520. In 2007, it was $7,030. And in 2008, you made $6,450. When I input these earnings into the 50059 certification for 2004 through 2008, it turns out you owe a total of $1,260.
I don't have that kind of money to pay back.
Well, Ms. Jones, what we can do is enter into what we call a repayment agreement. What if we set up an agreement that you would pay the balance of the money owed in 12 months? This would mean that an additional $105 will be paid per month for the next year. Are you able to afford this amount of money?
Yes, that sounds reasonable.
Great. I have here with me a repayment agreement I'd like for you to sign. Here's a pen.
Thank you.
And I will sign and make yourself a copy.
Thank you, Mr. Stewart.
Thank you, Ms. Jones, and have a good day.
Thank you. You too.
Okay, hope you enjoyed that little skit on underreported income. And now I am back to touch a little bit on overreported income. There may be cases where there have been overreporting of income by the tenant, causing them to pay too much rent. Adjustments may also be needed in this scenario. When income has been overreported, tenants are responsible through their lease agreement to come in and report decreases in income. If the owner agent finds the overreported of income, you should bring in the tenant to discuss this, and the tenant must agree to the reduced income and also provide a reason for the reduction. Now, to repay the tenant, the owner agent must complete corrections to the prior certifications that were affected by the decrease in income, and the amount repaid is the difference between the amount of the rent the tenant paid and the rent the tenant should have paid. And the option of how to repay the tenant should be given to the tenant, whether to be applied toward their rental or any other fees they may have, or in a lump sum payment. The reimbursement must be in accordance with Chapter 8 of the Handbook, paragraph 821, 4350.3. Just as a reminder, there are both overpayments and underpayments. We want to make sure that we follow the RIP initiative and make sure the right benefits go to the right persons. So at this time, I am going to invite Yvette back up to discuss the monitoring section.
Thank you, Michael. We're getting close to the end now, and at this time we're going to talk about monitoring how EIV is accessed and used. A little different topic from all the reports and so forth. Some of our discussion topics today are going to include the voluntary use of EIV, which we have a very short time span left for EIV being voluntary, the mandatory use of EIV, preparing for and conducting MORs, and completing an MOR report. Just recapping voluntary use of EIV, OAs that are currently not required to use the EIV system. They cannot be written up for not using the EIV system. But OAs that are using the EIV system are subject to the same use restrictions as if it was a mandatory requirement. They are subject to the use restrictions and requirements that we will be outlining under the mandatory use further into this discussion. Mandatory use of EIV. We will be primarily speaking about the mandatory use of EIV since that date is coming rather quickly now. EIV is slated to become mandatory on January 31 of 2010, and that's with the final rule, refinement of rent of income and rent determination requirements in public and assisted housing programs. As Gail mentioned, you must get EIV access, and EIV must be used from that point forward, January 31. Once EIV becomes mandatory, OAs will be required to have access to EIV and use all of the income and verification reports located in the system. I just want to note, with the housing notice we have out currently, the 0920 that will be revised, where we have shoulds, mays, and recommends, those will all be changed to musts. OAs with the mandatory use must update their policies and procedures to include the use of the EIV reports. They must update the tenant selection plan due to using the existing tenant search. They'll need to establish or continue to maintain EIV data in accordance with the security safeguards that Michael spoke earlier of today. Once mandatory, when preparing for and conducting an MOR, determine if the OA has access to EIV and is using EIV. Review EIV income reports. Review the EIV verification reports. That would be the multiple subsidy report, deceased tenant report, the failed pre-screening and verification reports. Prepare your addendum C, and under this section of other, you'll check for the time being until the form's revised, other, and in that slot, here's the slide of the addendum C form where, as we indicated last year, you would be checking other. This is where you're going to be listing out the forms that they must have available when you come out to your MOR. Those forms include the coordinator access forms, the original one that is signed, and a copy of the current one. The user access forms, the original one signed, and the current one. The EIV owner approval letters, security awareness training questionnaires that are in paper form, those that were completed later after we went to the online training, those can be viewed online, so those need not be printed off. They will need to have any rules of behavior that are signed by individuals that are using EIV reports but do not directly have access to the EIV system. And I will say we did get a call the other day in that there was an MOR, and the PBCA called us and said the owner doesn't have a lot of the CAAFs out on the site, and just provided us with a certification that they have all of the documentation. Is that acceptable? Well, no, it's not acceptable. On the addendum C, it specifically states, and you can look back in the slides that you have printed, it does specifically state that those documents must be there for review. So we cannot take any owner certifications or management certifications if those documents are not there on site the day that you come for your management occupancy review. When conducting the MOR, review the secured environment where the EIV data is located. It just might be a matter of when you're walking through the management office to see what files are open and see if there's anything, obviously papers laying around, things, EIV data stacked up in piles in the corner on top of file cases, things of that nature. Keep an eye out for items such as that. You're also going to be reviewing, as I mentioned, the documentation that was listed on the addendum C. Review with the owner agent the income and verification reports. That includes the deceased tenant report, multiple subsidy report, identity reports, which is your failed verification pre-screening report, and see that these items are being cleared. Review the tenant files to verify that the current 9887 is present in the tenant files. And then here we just have a slide simply, this is once you enter EIV stating that yes, you will review the files for the 9887s. Again, when conducting your MOR at this time, we're in a mandatory environment now. You're going to review the policies and procedures to make sure they've incorporated the use of EIV. Review the tenant selection plan, make sure that they've incorporated their pre-screening to include using the existing tenant search. Review the selected tenant files for evidence that the EIV reports are being used as third-party verification, and also that documentation on the income discrepancy reports are in there and the discrepancies have been resolved. There's been third-party verifications. Any type of telephone call documentation to go to resolve the discrepancies, to evident that those discrepancies have been resolved. Then moving to completing your MOR report. Again, if you're doing so prior to January 31, prior to becoming mandatory, EIV is not mandatory until January 31, and you go on site and a property does not have access, you cannot write them up for failing to have access to EIV. If they do have access to EIV and are not adhering to the requirements that we just spoke of, those can be observations or findings. And here listed on the next few slides, we've set out what are observations and what are findings pre and post the January 31 date. So prior to January 31, we've got items listed here that should be made an observation, not a finding. And I just want to mention on item 1 that we have received quite a few emails through this email box alerting us certain forms have been missing from the owner-agent files, and we have been terminating accesses. And we do want to remind the PBCAs and the HUD staff that when you go out and you do a review and you determine that these files are missing and you do notify this mailbox, make sure that you advise the owner agent that they have to, even though this is an observation, they have to mitigate that action. They have to provide those items to you in order to have that access reinstated. Again, prior to becoming mandatory, there still are items that are findings if you go out. Missing 9887s, obviously. Misuse of EIV data, and a few of the other items listed here. Now, after EIV becomes mandatory, there are quite a few items that are going to become findings when you go out on site. In the presentation here, we've got 18 listed. Please take your time in reading those. I do want to note a lot of these, a few of these that were observations before have now become findings. A couple of new items on here, but please, you will need to read these. And make sure when reviewing the reports on site with the owner agents that the data that they have on there, on the multiple subsidy report, the deceased tenant report, make sure that they're clearing these items off of these reports. That's going to be a finding, okay? As well as, and I just want to stress, as I did earlier, the pre-screening report and the other failed verification report. Those are findings if those items are not being cleared. But again, be cognizant that they can be false positives. Some of those items, perhaps they're not, let's just say, valid errors or valid discrepancies. But what you're going to be looking for is the documentation in the file evidencing that the owner agent did attempt and make a good attempt at clearing those items off of those reports. Now, shortly after the first of the year and after EIV becomes mandatory, we just want to mention that there are going to be a number of publications revised. They're going to set out a lot of citations for these findings to assist you in writing the MOR reports and providing a lot of data to follow up in updating for EIV's mandatory use. We're going to be providing an implementation notice for the mandatory use of EIV. We will be publishing an EIV and U brochure notice. We will be updating the 9834 to include items covering the EIV mandatory use. We'll be updating the EIV notice, the 0920 notice, as I mentioned earlier, basically replacing and putting musts in where all the shoulds and recommends were. And we'll also be updating, of course, the 4350.3 handbook to incorporate the EIV changes. So just to recap with the MOR and to think of it in the mindset of we're in a mandatory state right now. You're going to do your desk review, look at your verification reports, pull those off, take those out with you, make sure those things are being reviewed by the management agents. And those discrepant items are being removed. Look at the income discrepancy reports. Make sure those things are being recalculated and all those discrepancies are being resolved or at least addressed. And particularly, again, your pre-screening and your other verification reports need to be cleared out also. Basically, once we become mandatory, all of the income and verification reports will need to be used by the owner agent. One of our last sections touch on just real quick note on record retention. Since our last webcast, we had a difference in a retention requirement for HHS data. As you recall, they wanted it removed from the files with great frequency. We did meet with them, and they were agreeable to extending that retention period to term of tenancy plus 3 years, which is in line with our own retention requirements and the SSA retention requirements. So that's been incorporated in the EIV notice, the 0920. So that was a good update for us. Not only the income data needs to be retained, remember also you're going to need to retain all of the documentation from EIV that substantiates your third-party requirements to your verifications. That's part of your tenant files. Those are now part of your recertification documents. Again, that's term of tenancy plus 3 years. And that, of course, is along with your tenant supplied documentation, such as pay stubs. Finally, we've put together some FAQs. These are questions that have come through our multifamily help desk. And like I said, these are ones that come on a regular basis, so we thought it might be helpful just to go ahead and review a few of those here. Because it's probably that there's going to be a lot of people out there right now have the same questions. So let's go ahead and that'll keep some of you from calling in asking the same questions. Right now we get a lot of questions on how does an OA unassign a user's role or properties in EIV from a user? Well, at this time they can't. Unassigning roles, unassigning properties from users, that has to be done at the help desk level. So you will need to call the help desk for that action. We have listed here the telephone number of the multifamily help desk. Give them a call. This happens quite frequently if a user is upgraded, say, to a coordinator, and the help desk says we need to have those unassigned first and then reassigned. So when that occurs, you'll need to contact the help desk. Another question we get with frequency, this is on the owner approval letters, where there are general partners and limited partners. How many approval letters do you need? Who needs to sign the approval letters, the owner approval letters? We only require that the general partner provide the owner approval letter. If you have multiple general partners, use your managing general partner. So that's one letter that's required. This is a situation that we've seen with some frequency. What should an OA do when their only coordinator leaves their employment? Plan ahead of time, first of all, because that's going to leave you with a gap. It may be that you have just a coordinator and you have no users, so you'll have nobody using EIV. There'll be a lapse. You'll not be in compliance. It may be you have users and their access is due to expire. Who will recertify them? So please plan in advance. If you see this happening, you'll need to get another coordinator as soon as possible, hopefully before this one does leave your employment. When that does happen, when you do have a coordinator leave, remember you cannot transfer that individual's access to another user. Passwords and MIDs are not transferable. That's why we encourage that properties and OAs have at least 2 coordinators, and that kind of will cover the bases when there are leave situations and unexpected absences, so that there's not going to be a lapse in time and users will remain certified. We received a lot of questions about accesses that have gone let's say unrecertified for over a year. People will call and say, well, I got access in June of 2008, I expired, but now it's November 2009, and I'm trying to submit my online CAF, and I can't. It won't let me recertify. Well, after 1 year, when your access expires, it locks out of the system, so to speak, and you will need to start the entire process over from scratch, and for a coordinator that would entail contacting the help desk, faxing in a new CAAF, and owner approval letters. The whole thing needs to be done from scratch. And if you're a user, the whole thing from scratch from the user standpoint. We've had questions come in from OA saying that tenants are unable to provide acceptable documentation to supplement the EIV data. And that means they're not able to provide the 4 to 6 pay stubs, which would be consecutive and current pay stubs that are required. If the tenant cannot provide those, because that is what you're calculating the income off of, you will need to do a third-party verification with the employer. And from that, you will determine and calculate the annual income for that tenant. As Michael had mentioned earlier, this has come up several times. You're looking in the EIV system, and you have a tenant that, yes, does work, okay? But the EIV system says they work at ABC Incorporated out of Plano, Texas. The tenant comes in, and you know they live in Bethesda, Maryland, and they're working down at a local convenience store of some other name. They don't have any documentation about this place in Plano, Texas. In time, I guess over years, you'll be able to know that, yes, that is that tenant's employer. Use the pay stubs, go ahead and calculate that out, and use a really strong reasonableness to determine whether or not that employer is the same one as the one that the tenant is working for. You should substantiate that if there are any doubts whatsoever by doing a third-party verification. If there's any doubt whatsoever, do a third-party verification to make sure that those employers match. But this is a frequent occurrence, so keep in mind, I guess over time, by the following year, the same thing is going to happen with the same employee, so it's not going to really be a cumbersome situation. We've had a lot of these recently. The coordinator has assigned properties to a user's MID number, but the user goes in line to submit their user request, and it says there's no contracts or projects assigned to me. What do I do? Well, it took us a while to figure out a couple of problems that were going on. One specifically, it wasn't really a problem, it was just the reason why this was occurring. When the user was in the process of completing the online request, they were not completing all of the required fields. All the required fields have a little red star by them when they go in and complete this request. The request is actually a one-page document. But in the center of the request, there's a small space with a little button that says Select. And over here on this side to the left, way over here, it says Properties, Contract Numbers. And we found that a lot of users were missing that step, and therefore they were not fully submitting that online UAF to their coordinator. So therefore, by the time the coordinator got it, or they went and they hit the submit button, there was no contracts assigned for it because they didn't do it in the system. So be cognizant when you go in there, under that select button, it's in the middle of the form. When you click that button, it's actually going to pop open a big window, and there you should be able to view your contracts. Then you need to go in and click on those contracts, make them blue, select them again. That's going to tie them to your user ID, so then you can successfully complete and submit that form. That's one possible reason we've found out. Okay, that concludes basically the Q&As that we have in my session on monitoring. I'd like to, at this time, turn it back over to Gail Williamson.
Thank you, Yvette. Well, it's now time that we're winding down to the end of this multifamily EIV instructional course. And before we close, I wanted to go over the tools and resources that we have made available to you. We have several slides because we have a lengthy list. I'm not going to read them all. A lot of them were touched on earlier today. But we have, of course, the Multifamily EIV website. If you haven't gone to our Multifamily EIV website, those of you who maybe haven't even gotten access to EIV yet, that's your first place to go. And the link is provided for you there. It's provided on the hard copy slide that you can download off of the website as well. The Multifamily Help Desk is available to you, and we have a variety of manuals. We have the revised notice. We have the resolving income discrepancies. We have, of course, the handbook, 4350.3, and we're going to be updating that to include EIV policy very soon. We have previous training that we have provided back last December that I encourage all of you to look at as well, especially those of you who will be new to EIV. And we have the Quality Control Monitoring Guide for another. Another piece that we developed this year is a guide to interviewing. Sometimes if the right questions are asked during an interview, you're going to uncover income that may not necessarily be reported if the right questions aren't asked. So I would encourage you to review that as well. I want to also indicate to you, let me clarify one thing that we talked about earlier in terms of the records that are kept in the tenant's file. I forgot to start off with that, but I wanted to make sure we got that in, is any tenant-supplied documentation that is provided to you, such as check stubs and all. Those need to be copied and the originals returned to the tenant. The copied version is what you include in the tenant file. As we indicated earlier, this is a new method for providing this course to you, and we would encourage you to provide us your feedback. I'm hoping that this is a solution to the technical difficulties that were experienced with live webcasts. But we felt that we should have a live webcast in order to answer your questions. So like I said at the beginning, that is scheduled for February 3rd, 2010 from 11 to 1, and that's 11 Eastern Standard Time. This live session is not only going to cover questions and answers that you have or questions that you have that you need answers to from viewing this instructional course, but it's also going to have an introduction to the final rule, the Refinement of Income and Rent Determination Requirements in Public and Assisted Housing final rule that is going to become effective on January 31st, 2010. That final rule, of course, as we've told you, that's what's going to make EIV mandatory. It also is going to require Social Security numbers. It's going to lift the 6 year and older age restriction that we previously had that's in the regulation currently if you're watching this prior to January 31st. I'm not going to go into the details about the SSN requirements here. You'll have to tune in on February 3rd because there are a few little nuances about that particular requirement. But I wanted to let you know that not only are you going to get your questions answered from viewing this course, but you're also going to get up-to-date information on implementing the final rule. We do have an implementation notice that we hope to have available very shortly after the final rule becomes effective. We're completing that now. And what I'd like you to do is, if you wouldn't mind providing us your feedback on this course, as well as giving us any advanced questions that you have about the course to us so that we can better prepare to get you answers on February 3rd. And if you would do that by submitting your email to this email address. And that email address has been in existence for a while, and it's primarily been used to provide upper management with your concerns and about the EIV system, any problems that you might have, and any recommendations. But this, if you'll also submit your recommendations for your questions that you want answered ahead of time to us, like I said, so that we can fully vent them amongst the office and be able to give you a complete answer on February 3rd. But when you do that, and I would like you to put EIV instructional course in the subject line. That way we'll know that your email has to do with the instructional course. The course that we've provided today, I hope, has been very helpful to you. Like I said in the beginning, we wanted to make sure we provided you detailed information about how to use EIV as part of your daily operations. We want to thank you for your efforts thus far in ensuring that the right benefits go to the right persons. But as Diane mentioned in her presentation, we did miss our goal this year. So we want to make sure that we work even a little bit harder to reduce subsidy errors. And we believe that the EIV system is going to be an effective tool to assist you in helping us reach our goals in this respect. So again, we thank you, and we hope this has been an informative course, and please join us again on February 3rd. Thank you, and if you're watching this before the holidays or during the holiday season, we want to wish you a very happy holiday and a happy new year. Thank you.